Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacino. How is everyone doing? Hello, Nas Industry. Hey, Patrick, Royal Palms. Good afternoon. What are the thoughts on the recent Poland and Russian developments? Well, we're going to have to wait to get some more concrete information. The headlines were a couple rogue missiles hit Poland, killing a couple people, but we need to get some more confirmation and stuff. The markets initially reacted, then shrugged it off, which tells you something about this market. It was, I mean, everything I saw was a little dip, rush in to buy it. Beyond that, we'll have to see in the next couple days what happens. What happens with the investigation? What pontificating goes on? If it's going to be any escalation, don't know yet. You can ask Bob what his thoughts are too. It's time to keep 25% of our portfolios short at all times. Okay. I mean, I think balancing on a portfolio is always a good idea. Excuse me, a good idea. Could somebody block the chat? What stocks do you think cups will be affected by the Poland and Russia, if any? Well, if stuff gets escalated, I'd be looking at defense stocks again. Let's see. Good afternoon, Sterling. Hey, Rich. I don't think the Russian missiles were tracking the 200-day moving average. Hey, CD. I don't think that's the way it works. They might have been tracking the harmonics, but definitely not the 200-day. I'll get Bob on in a second. Hey, Mike, hope you're staying warm. What snows outside? Yeah, it's snowing here. Ugh. All right. Hey, Peace World. Good evening, Anissa. Oh, you don't see anything? There was a new private dating chat service. I mean, that might be not be so bad depending on if you're single or not, but I don't think it's that reputable. Just a gut feeling there. Uh, Good afternoon, Sashi. All right, let's just subscribe. There we go. Did the subscribe thing. And let's get Bob on. Hey, Bob.
What's up, guys?
How you doing?
Doing good.
You doing good?
Yeah,
That's
excited.
good.
I don't have a ton of time, so I wanted to just kind of talk real quickly about my opinion having not changed. We do this thing every couple of days, and since I'm usually talking mostly macro stuff, my opinion hasn't changed on much. Still long ES futures, the S&P, still long crude oil. Nothing in that equation has changed. Actually, went a little bit more my way on the crude oil, less my way on the ES after this missile news. I will say, that I thought this missile news was pretty interesting, simply because we all know there's a sect of people that are like, very everything is suspicious, right? Mike, I don't know if you know any of those people. But of
No.
course, the first thing that I heard when I sent that, Mike was about to say he does. Um, the, the first thing I heard when I sent that to a group of people, to make people that I talk to on a regular basis about markets and stuff, was one of them replied, "This has CIA written all over it." Right? Um, I thought it was interesting that Russia did not say it was an errant missile. They right away went to it was provocation by the West. So, I really would have liked to have heard the Russians say it was an errant missile, it was meant for targets in the Ukraine, and just leave it at that. Article 4 of NATO has been triggered. And Article 4 is basically just a consultation article that Poland is now able to officially consult with the rest of their NATO allies to see if any sort of action needs to be taken. This was not, Article 5 is not an immediate thing. Everybody's talking about Article 5. NATO has to now defend and attack the perpetrator of this missile launch, but that's not the way it's written. There's a lot of leeway in the NATO treaty to consider what to do. Now, President Biden said every inch of NATO territory will be defended. He also said that it wouldn't matter if it was a mistake or not. But I suspect that that's not going to hold. I suspect there would have to be multiple incursions. It was only 4 miles from the Ukraine border, not picking a side here, but there's plenty of outs, is all I'm saying. And you kind of saw that in the market reaction immediately afterwards. Crude oil got one of the bigger jumps, had a high of about 86 and change, got up to about 88 and change pretty quickly on WTI, and then pulled back. So did still finish higher than it would have otherwise finished, I think, simply because it was pulling back at the time that it happened. But we'll have to see how that plays out. I'm not a geopolitical expert. I have done some geopolitical strategy a few years back for an oil firm that I worked for, but this is not something that kind of touch a nerve with me where I need to quickly research it, other than seeing if Article 5 was automatic, and it's not. So if there's any questions for me, I'm happy to take them.
Oh, well, hey, here we go. Hey, Mike, Bob. So, what happens when Russia says it was not an accident?
Well, they're already saying it's a provocation by the West, Paul. So they've already basically denied that it was one of their missiles. Now, the fact of the matter is, the West, as let's just use that as a monolithic term. Okay, the West has plenty of captured Russian weapons, whether it be from Afghanistan or whatever. So Russia could credibly say it's a provocation. I'm not saying it is or isn't, but they could say it credibly. Okay. From that perspective, whether it is or isn't a Russian weapon, I don't think is in question. I think it's more in question as to who did it. I think if you say NATO, but if the U.S. specifically can't prove that it was Russia, I think this will probably just be chalked up as an errant missile attack. That's my guess.
Let's see. Hey, Bob, since you said you don't have much time, couple things. Any thoughts on today's PPI?
Yeah, PPI is more of a okay, so a couple things on PPI. PPI is more of a confirming data set now than a predictive data set. And PPI came in, if you look at the month of PPI was October, the CPI we just saw was October. So if I would have been on here, I would have told you guys I expect PPI to be pretty tame. One of the things I'll say about that is if you look at, for example, copper's had quite a rally since the October lows, and an even bigger rally since the September lows. I might be wrong on that. Copper's had a pretty big rally. Okay, some of it was, copper was coming off through most of October. It was either coming off or going sideways. So this particular PPI would not capture that. All right. So you have that. So I would say that this particular PPI doesn't really show us anything except it confirms that this was a goods compression of CPI. Now, I think, Mike, I don't remember if I texted this to you or if I was in a podcast on the live stream where I said it, but services CPI actually was up again. 3.8 in September, 3.9 in October. Yeah. And that's the thing that we say is sticky.
So yeah, you did text that to me, and that's the thing that is sticky with the CPI. But we're in pretty strong rally mode. Any thoughts tomorrow? All right, we've had some Feds. Let me get over this. We've had some Feds speaky. Just put that in there for your sake, Bob.
Hate when you say that.
If you never commented, I probably would have just dropped it. But
I know. It's my fault. let's talk about Walmart and Home Depot, right? Before we talk about like a retail sales prediction.
Yeah, I was
Because
going to ask you
tomorrow,
that about so we got to call. Hold on, we got to cover Fed speak, Home Depot,
yeah,
Walmart slash retail
yeah,
sales. Then you're off the hook.
I went out of order. So Fed speak has been leaning, so it's been the same thing. The Fed now, in my opinion, and it's only been like Brainerd Harker, Lisa Cook, Lori Logan. By the way, super interesting conversation with a friend of mine who used to work at the New York Fed. I should just leave it at that because he might, well, never mind. He used to work at the New York Fed, now works at a private bank. He said he knew Lori Logan personally. Lori Logan was running a repo book at the New York Fed, and she called him to have breakfast to ask him what repo was. Just throwing that out there.
What?
Yeah, she was running a repo book at the New York. The New York Fed operates somewhat independently from the Federal Reserve. And they had their own multi-billion-dollar repo book, and she had breakfast with him and was asking him what repo was, asking him to explain repo to her. And now she's the Dallas Fed president.
No,
Yeah, so that
no,
just yeah.
no.
So if anybody believes the Fed is not political, there was some political maneuvering in that hiring. In my opinion. I mean, he was shocked. He didn't know that she was the Dallas Fed president. He asked me what I thought Robert Kaplan, when I thought Robert Kaplan would speak. I pointed out to him that Kaplan was gone. He was forced to resign for doing something unethical but legal. And I said, yeah, Lori Logan is the new Dallas Fed president. And his jaw, I mean, I couldn't pick his jaw up off the floor. It was brutal. So anyway, she was one of the speakers we had. We had Lisa Cook, we had Patrick Harker. We had the vice chair for supervision, Barr. I forget his first name. Barr spoke today to Congress. He's speaking again tomorrow. Tomorrow we got New York Fed President John Williams. This Fed speak we've gotten so far, specifically from Brainerd, but Harker said it as well, is that it might be appropriate to step down the pace of rate hikes. Now, that didn't say stop rate hikes, which is what I would call a pause. Certainly didn't say reverse them, which is what I would call a pivot. But he also said that the Fed's balance sheet should be a tool they keep in their toolbox. And he said they would likely reduce the balance sheet by about 3.5 billion, or did he say trillion? I think he might have said trillion. Anyway, that would be about the maximum they would be able to reduce it by in the short term, and they would keep selling of securities in the toolbox, so they wouldn't come out and do quantitative tightening. So what they're doing right now is quantitative neutral, right? It's not technically quantitative tightening because they're not selling securities, but whatever. These are all new terms. I don't really care how you want to define them. So I would say that the Fed speak fits perfectly with what's happening with the data. We still only have one slightly easier inflation print and one corroboration of that inflation print with the PPI. Now, you saw at Home Depot, they had less foot traffic, but higher sales. That was based on inflation. Okay, they even said it. They said we were selling fewer things at higher prices, right? Tomorrow we get Lowe's and Target, and then we get retail sales basically right after that. So that'll be really interesting to me because Walmart blew it out. And Walmart doing well is sometimes a sign of people not doing so well because Walmart has, price guarantees. So the Target numbers, I think, to me will be super interesting. I don't expect Lowe's to be that much different than Home Depot, although I think Lowe's in certain areas of their store tend to be lower price than Home Depot, but I could be wrong about that. And then the last thing I'll say about the retail sales figures is, again, it's not inflation adjusted. So this particular retail sales number, I don't expect to show us much because if it's lower, it could be in part because goods prices have come down. If it's stronger, it's really saying a lot. There's a new private dating jet. So anyway, what was the third? We have a third thing to talk about, Mike? I don't remember.
You got Fed speak. We got no. That's about it. I mean, let's see. We just have retail. We have more. Nothing that I don't think anything new is going to come out of Fed speak. The CME watch tools 85 to 15 for that 50 basis point. I think they're sort of saying they've baked the 50 into the cake at this point.
Yeah.
Uh
Yeah. And I think, again, like Mikey, when you look at the yield curve, last I looked at the twos tens, it was at 57 again, which was the all time high settlement. I should say the all time inverted low settlement.
yes,
Now, it
we're
may
right
not have,
back to that level.
okay, it may not have settled there. I don't know. But the lowest, the most inverted settlement we had since it inverted was negative 57, and it spent most of the day there. What you're seeing now is bonds are starting to price in a recession. Stocks are not yet. Now, again, to point out that stocks can go up during a recession, but they generally don't go up during stagflation. So, again, we end up in a situation where is the Fed going to be able to control inflation or not? Or is the recession going to work to control inflation on its own? And if it doesn't, stocks are in a lot of trouble.
Yeah, and just for one point, yes, stocks can go up in a recession, but they generally don't go up at the very start of a recession.
Right. Agreed.
They go up once in recessions, entrenched because you have the stock forward looking thing. They're going to start pricing, earnings go down in the recession, and it starts getting priced in. All right, the earnings contraction is done. We're starting to get the multiple expansion again, so the market starts
Yeah.
anticipating that, and you get the move up before the recession officially ends. And then, like a year later, they say, well, the recession ended 6 months ago. So,
Right.
because, it wouldn't be helpful to be more real time with any of this information.
Right. That's the thing. Is like the recession. We tend to go lower into the recession, and then the Fed responds, and we go higher once the recession's already started. That may not happen this time, depending on inflation.
It'll be interesting. Oh, one more question. Any thoughts on uh the FTX crypto carnage?
I don't know. I mean, they say there's over 1 million creditors to FTX. The numbers themselves, again, are not that big, but they're about to release the list of creditors. I think it's tomorrow. It might be the next day. When they release that list of creditors, we'll see the biggest names at the top and how much they're actually. That's when you'll start to hear talk of whether there's going to be a mini contagion from this or not.
uh, you gotta love some of the risk management they put in place, though.
I know. And a lot of people are saying, okay, this thing's out of the way now. You can buy crypto again. But it's not out of the way. I mean, Solana is screaming again, but it's not out of the way. I did hear a sort of, I can't reveal my source, but I have a mini confirmation that Tom Brady was minus 450 million all in.
So, well, we'll see. It'll be interesting. I don't think the fallout's done with crypto, and we have not hit the key levels yet.
Right. Right.
All right. Well, thank you. So, we're going to see you again Thursday? Is everything sorted out with what's been going on?
Yeah. Yeah. Everything is sorted out. I'll talk to you about that offline, but everything's good.
All right. There we go. Well, thank you for being here. I'm going to get to some other questions that are more technically based. Unless you have a comment, let's just get to one more thing real quick. We had a question
Yeah.
about the dollar index, and I talked about it coming back down. It actually came down to the 200-day moving average and very key support, and we have a potential reversal candle here. Any thoughts? More medium to longer term with the dollar? Is the dollar strength done longer term, or what are your thoughts on this?
No, no, I don't think it's done longer term. I think so. Obviously, we came near that 200, and then that Russian missile news came out, and the dollar recovered, and so did, by the way. Gold was negative, and it popped higher. I think it still finished slightly higher. I don't remember.
Gold
Um,
is still up for the day.
okay, it was down on the day earlier, not as much as silver, but it was down. And I think the interesting part about that for me is that it shows you if this does, um, what's the word I'm looking for? If this does accelerate the conflict, right? If this accelerates the conflict and NATO gets involved in any way, shape, or form in an official capacity, that's really bad for Europe. So how do you not again reinitiate dollar longs? You have to. You have to. So this, I think, is an appropriate pullback. I think the level's appropriate. You got those two that basically that's significant level that came in right around the 200. I think it's
Mm-hmm.
a very appropriate pullback. I don't know that we'll get up and make new highs, but yeah, they. I think the dollar strength is not over. It was a very nice pullback and reset, in my opinion.
Well, there we go. All right. There we go. Thank you,
Yep.
Bob.
All right, guys. I'll
All
talk
right.
to you guys on Thursday.
Okay, thanks.
See ya.
Hey, everybody. There's some comments in here I am going to ignore. Yeah, I'm watching now. My thoughts on the dollar, watching for a bounce on a continued rally above today's high. By the way, is an aggressive percent B, why it's against the rotation zone, but I am watching for an aggressive bounce play here. And the first major key area is back to that 108, and that's only if it can get above today's high and then sustain a close above there. And I've talked about potential ways to trade that before. So also to the people who have joined as members of the channels, I did put up a new NVIDIA levels, my thoughts going into NVIDIA earnings and a stock I do like better, especially for a longer term play. S&P, so far this is a sideways correction. We still don't have cycles rolling over. So far, it's a sideways correction, but the rotation zones coming in now has risen to the prior resistance becoming support breakout area from the end of October. So this 39, 39.10, 39.12 area is key support going in. Should we get that bigger pullback to 3,900? Remember, we're watching potentially this 4,000 area for a pin move overnight. Right here, 4-hour rotation zone. See how it's hugged this at the end of the day? That's where I'm watching. If we do break down to that, there's a pretty decent clear path move back to that 39.12, 3,900, 39.15 area, which would also be in conjunction with the rising 50 on that time frame. Shorter than that, again, you got the little missile, the double missile sell off, and then the bounce back. The bounce back with the first and second targets. By the way, the double is still in play for overnight should it rally to the final targets. But these other two targets, you can see triggered, first target pause, back to the triggering point. Coming up, second target, making this little mini, not a double. Why? The targets, this went beyond the move that started it. So you cannot treat that as a double. It would be two tops right at that second harmonic, then a third one coming up there, back to the trigger point, and now just into the closing price print. So that these levels can be utilized in the markets, and I already gave the major breakdown level. Minor breakdown level, since it's been tapped a few times, 39.90 for just a slight pullback into overnight. NASDAQ, same thing. First target, second target, and you can utilize the same levels. A break below about 1875 is a little pullback overnight. Dow, I'm repeating myself. The breakdown point, the little breakdown point is 33,500. And the final target, 33,711. Russell only managed to hit the first target. This again is not quite there. was not quite there. I don't care if the targets work, it does not test out as high probability. But the double is still in play after the first target's hit. Bigger picture on all these. So far, sideways correction with a potentially bigger toppy area. Yes, on the bigger time frame from the Russell, is this a potential double top? Yes. That's one thing I'm watching on a close, at least a 4-hour close below 1863.40. The Dow has broken down for this level we talked about before earlier today, 33,625 area, and now testing it from the other side. So if we do roll over, that's not a huge topping pattern, but a minor topping pattern for at least a couple day potential pullback. And the NASDAQ is just waning momentum with divergences up here. So the NASDAQ doesn't really confirm any substantial breakdown until we get back to 11,635 area. The DAX, everything's just trade. I'm just bumping up these targets now since we have a little longer pausing area. But key area I'm watching is at 4-hour rotations on about 14,100. Notes. No, this is not a potential double top. So there's nothing there right there on this bigger one. And this isn't a potential mini double top because it exceeds the move. So a breakdown below this 112.08 would just be to retest this support zone. Swear, it doesn't mean if you trade below this point that it's not a potential continued move to the downside. It just has a stopping point a lot higher. We already looked at the dollar index. VIX spiked with the missile news and then settling. I was watching to see where it settled, 24.35, settled just above that, and look, that spike right to that rotation zone. So I'm going to be utilizing this 24.35 tomorrow at the open. Crude, still nothing. Still nothing. And no, this isn't a double either. Although you break above this little key high about 90 bucks, yeah, I look for a retest of the highs. Where else do we sit? Euro. We talked about that this morning. Tagging it. Still, this is technically a sideways correction on a candle closing basis. If we start breaking below yesterday's lows, I'm watching for the pullback to the rotation zone. Already looked at Bitcoin, Tesla. Got the Elon compensation trial going on now, closing back below, spiking in the rotation zone, almost up that harmonic and then back down, but nothing has really changed. Besides, if you're trying to do something with this, it's more aggressively, from my perspective, moving up targets. I wanted to check what we had after the close today. Advanced Auto Parts. I looked earlier, right before the podcast, this live stream started, and didn't see anything. I want to check in at that tomorrow. We have Target, Lowe's, my favorite place to shop at, TJ Maxx. I actually don't do any clothes shopping. I'm wearing the same clothes I have for years. I wear them until they wear out. Then I unfortunately have to buy something new. And tomorrow after the close, NVIDIA and Cisco. So I put up that NVIDIA video today. Let's just Advanced Auto Parts. I'll probably do a member. Oh, shoot. Gosh darn it. Double and triggering after hours. I am watching for a pullback here. Why do I like this long term? Everybody, I'll just put this out. This is the kind of stuff I'm going to put out for people to join. I'll just sort of give you a preview. Decent dividend yield. I've been asked what other dividend stocks do I like. I like dividend. I liked AAP for a dividend yield, especially on pullbacks. Okay. The where is it? P to E ratio got overdone on this rally. I do like things like AAP, especially as a recessionary play, because people have to work on their cars a lot more just from a fundamental point of view. It got a little too high with the PE ratio. I was hoping this was going to be a little short-term short play, but it's going to be taken out with these levels already after hours. Why do I like this though? Here was, if we did pop, this was a little cone. I was watching for key resistance. It's back down below the weekly 200, but I am watching somewhere 157.75 to about 142.59 for a key position stuff. Once, and this is one I consider trading around the core position, once we get to cycles, weekly cycles back down, daily cycles back down, I'd be looking, because of the dividend yield, PE pulling back in. And then it could be, if you want to try to treat this, this is something on spikes down. If you get some potential, especially a spike down into oversold conditions, down closer to 62.5 and this key support area, areas I like to consider doing cash secured puts. Because why? You can harvest some yield if you don't get assigned. If you do get assigned, I like it for a tight stop from trading around a core position, where if I get then a weekly close below 62.5, I can lighten up and wait for an even better pullback where the yield keeps climbing and the P to E comes in even more. But right now, it's having this nice lower high, lower low, which would take it into a key buy zone, both potentially fundamentally and from a technical perspective. So this post earnings could take us down into a key area. That's more stuff that I will be covering if you do choose to join this channel, to give people more thoughts of things they can look to in the future. So, always appreciate some feedback, just a little sample. So now that's not going to be a subscriber only video because I already covered it. Also, back below this level takes it to, it was support at the weekly 200, support, little bounce, little pause there, became support again, and now's back below it. So any rallies, I'm looking for the rollover plays. All right. All right. So, hey, Dr. Michael, thanks for being here. Question, why do we have an SEC other than to help orchestrate Ponzi schemes and launder political contributions and foreign aid Look, I've talked about the SEC. I think if it's become a farce of an organization, not just under Gensler, but before. They don't do anything. They're going to go and act all tough after the horse has left the barn, which I don't know what the point is then. Oh, we'll come here to what? To point out the obvious, like investors get hurt. And I'm not just talking with the crypto garbage FTX. I'm not talking from a political standpoint, because you had the same garbage under the Trump organization with a different sheriff, who actually I think is even worse than Gary. But it's a joke. They'll go after peanuts. They don't really enforce anything. If short sellers and smart people out there are smart enough to spot and call out a lot of this fraud and put it out there, and then the SEC doesn't even investigate it until somebody gets hurt. Oh, somebody got hurt. Now we have to act like the tough guy. It's a useless organization. It's completely useless. And you have all the political tie-ins on both sides with this stuff. And then, you're SEC head and you go off to private industry and you get, I get to work for a hedge fund now and make tens of millions of dollars because I never enforced anything. And then I'm back in private industry and I already greased all the wheels. It's garbage. So there's my thoughts on that. And I've talked about that before. And it's not one side of the aisle or the other. It's been garbage for years. So stop wasting my tax dollars on garbage and either enforce the rules or get the hell out of the way. Because at least if you're the hell out of the way, then it's the Wild West And guess what? Everything goes. And then you can't complain when anybody gets hurt because it's the wild friggin' West out there. So stop pretending we have any enforcement action besides going after the little account. Oh, he did a 100-share insider trade. I'm going to fine him $50,000. Big friggin' deal. Go after this white collar fraud and crime and all this crap. You know, and then these white collar CEOs get, oh, here's a little slap on the wrist for you. Oh, sorry you made $100 million. We're going to fine you $2 million. Here you go. Oh, look, you made 98% on that trade. Does that answer your question, Sterling? So, could I go over to SPY levels? See, now people will say, why should I pay to join your channel? When you're spouting off this crap, SPY levels, your key thing to watch for still is this. I'm using the same level, which was virtually the low today. These levels have not been adjusted since this morning. 394.35. You came in just in front of that. That's still the key level to watch for your pullback. All right. You got the gap up. You got the gap fill. That's still the level. And then your next major level is 390.35 with the rising daily rotation zone. You drop below there. The next minor area I'd be paying attention to, you got double harmonics and a gap open, 387 to about 387.85. Below there, you have a real quick trip back to the daily bottom of the rotation zone and 50 in front of a major gap fill. But all of this is support. So from a short side, you have to be nimble. We've taken out the next harmonic. We don't have a strong pausing bar yet. I want to see this. I am curious to see where the minor harmonics fall right now. Right there. So until I get a major bar, I'm using the minor harmonics because we don't have a major pausing bar yet. We do have a pausing bar on a 4-hour basis, so I can use minor harmonics. Sort of an advanced thing there, but what does that reinforce? The 200 again. So 406.50. And remember, anything up between this 87.5, 100 fulfills the probabilities from that close above the 62.5. So does that help you, Royal Palms? Mike, the NASDAQ appears to be overcooked on stochastic RSI. Do you still see bullish move to 200-day moving average? Like the rest of this week? No. Longer term, we still got the probabilities up. This so far is just a little minor pullback. Unless we get a significant topping pattern, which this is not, we do not have a significant topping pattern yet. So it would be a pullback pattern. Remember, OPEX Friday. Then we have Thanksgiving week, which is notoriously bullish. What's the only thing that would shift me without a topping pattern? I need a close back below essentially 11,097, so 11,100. Because then would be through all the support and below the probabilities for a pullback. We're a long way off from there. And without a topping pattern, there is no probability shift with a bullish probability still in play. You know me, not trying to be right, trying to play the probabilities. And this could easily, even with a pullback, get out. And if there's let's say it pulls back and then we get somewhere around the 4,000 pin, This week, it's within shooting distance of 4,100, which is the 200 again. Then we're starting to unwind some more probabilities. The Dow. Still, look at this. No close above the 62.5. Russell, I'll be keeping an eye on here. This will also be telling to see with this double top pattern there. I wouldn't read too much in that. We could gap down just by what goes on in Europe tonight, but that's going to be more what goes on and transpires with Poland, especially once Europe reopens. Okay, so I would not put that on. If we gap down tomorrow in the stocks, it'd be more. What I would be more looking at is what transpired in the European session. I wear them until my wife tells me to get something different. That's pretty, yeah. I wear them until my wife says, you cannot wear that anymore. There are too many holes in it. You can't go out of the house like that. I go, why not? She goes, no, you got to get rid of it now. That's how it works. Bob was here earlier, John. Panvit. Mike, I will join the advanced tier, but I'm in another country for a couple of months now, and this Google Play is allowing me to make any purchases since the currency will change, which boosts the subs. Well, thanks, Panvit. Just do what you can. Again, that's why I'm keeping a lot of stuff free. I'm trying to help as many people as possible. Do I think defense stocks is good to buy right now? It depends on the stock and the setup. I think if things escalate more, you could get a pretty strong rotation into defense, but that's also going to determine if we start getting a more substantial pullback in the markets, because defense, besides what's going on geopolitically, defensive stocks are defensive in the market. People rotate into them for defensive plays. Why is the market pumped before the close? We're back to buy every single little dip mentality also. And George helped answer. Defensive stocks are a step above cash. They don't move much. And when, especially this time, you can get some upside surprises. Oh no. I'm like the financial Jim Gaffigan. Is that a good or a bad thing? Jim makes me laugh. I hope it's not a bad thing. Meta, I'm still watching for upwards play even after a pullback. It's way overbought those cycles at the top, so I would not be chasing it higher. I will reassess on the pullback level. There's still, from probability wise, should see some higher prices after a pullback, but would not chase it higher right now. Did not see that, George. I can't. There's just too much stuff. What is RYCEY? Rolls Royce Holdings. Oh, do I have any opinion on it? Not really. I mean, it's back to major resistance at the 200. So I mean, it's an OTC stock. I hate trading this crap. I just watch if you're bullish on it, watch for a pullback at this point. I mean, your prior breakout level and the rotation zone is right about back at this, right in front of a buck. So, 98. So you could watch for a pullback there. It's way overbought on a short-term basis, so I would be watching for a pullback. I don't like to trade that kind of stuff. Watch with the semis with NVIDIA's. I would not be chasing, as I said, would not be chasing semis here. Reconnected with the 200. Gonna watch the strength of this pullback. Things are very overbought. NVIDIA's overbought. The stock I mentioned with NVIDIA's very overbought. I'm watching for a pullback in this right now, especially after tagging that 200. So if you're long, would be trailing this even AMD coming right up to this 50% area. Gonna watch for the pullback. The pullbacks and semis are gonna tell us a lot, and then if there's a position for another bounce up play. Hey, Options 22, thanks for being here. Can I look at the NASDAQ? Why would I look at the NASDAQ 1 minute chart? What? Are you watching this last little run up into the close? I mean, put it in the scheme of things. On this, that's just a close positioning into the close with a volatile afternoon session. There's nothing that sticks out here. There's nothing. Even you have the S&P. Look at these. The swings this afternoon were pretty consistent. All right. That's where we sit, everyone. Thank you for tuning in. And I shall talk to everyone later. Have a fantastic, wonderful evening. Bye for now.